Oh my God, this is one of those super alarming, scary posts out there to warn a lot of people, including lawyers, realtors, flippers, civilians, people out there in the real estate world. There's this new rule out there called the FinCEN reporting rule that is going to make it a crime for people not to fill out this monstrously long and complex form, and it's going to catch all kinds of people completely off guard, including especially like the probate practitioners or people involved in probate or real estate deals. Now, here's the thing. What this is about is called the FinCEN reporting rule. Federal government's trying to find people that are engaged in money laundering, foreign and offshore transactions and things like that. The big boys, that means any bank transaction, any of the title companies, Fidelity or Chicago, or just anywhere that you would do a big transaction, or any institution doing a transaction, they're going to be doing this reporting. But here is where people are going to be caught off guard. This is going to be all of the, flipper people, again, all the sort of small shop lawyer people, medium shop lawyer people are going to get caught in it as well. Because we're used to doing things like you do a probate, Matt dies, it goes into his two kids' name, and then you want to prepare a deed and transfer it in to a corporate name or something else like that. I just had a call about that today, as a matter of fact. This is very common, right? So, we've been practicing 25 years and you know how to do a real estate transaction, and you just prepare the deed that goes from your client to his entity or whatever else, and boom, if you have not complied with this FinCEN reporting requirement, you, sir, have committed a crime, a federal crime with just insane penalties associated with it. It's 31 USC 5321, and oh my God, 31 USC 5322. That's the criminal side of things. But this is an alert to my friends out there that are probate practitioners, because that's where I see the real opportunity for exposure are those lawyers that are out there, like me, doing normal estates, and they do what we've always done, which is help our clients put it into the next entity. I'll tell you, I'm never doing that again. The estate is going to go from dead guy into the kid's name, and then if they want to do something out on the other side to that, they're going to go to some other title company or lawyer's office are going to do that. But it's a huge area of exposure out there that people are not aware of. So let me read the intake checklist. It's a residential property in 1 to 4. Non-finance, that would be, like a cash transaction or whatever else like that. Legal entity or trust, that makes anyone, the lawyer doing it, anybody preparing a deed, a civilian, not a lawyer doing a deed. And again, in a completely honest transaction. I'm not talking about something where there's a real crime involved there, or where somebody knows that their client or somebody's participating in money laundering. That's not what this is. Because that would get you into the willful side of things. I'm talking about anyone preparing a deed at all. And, oh, by the way, there is some information out there that FinCEN, or the financial regulating authorities, are actually looking at this already in the context of this crazy investigation era that we find ourselves in. So if you're involved in real estate at all, look at this video, take a look at the links, and then this helpful section we have there on the information. It's just going to blow your mind.